Hey, you don't need to use a financial advisor. Just do it yourself. Just do it yourself. Just do it yourself.
And you very well may not think that you can afford a financial planner, but can you afford not to have a financial plan in place as you enter into retirement? Because you don't even have a clue all of the risks that can come at you when you have to start paying yourself an income from the assets that you've been saving all of your life. Hello, this is Eric Douglas. I'm here with my colleague Aaron McAndrew recording a new episode of The Money Puzzle to be found on the Family Wealth Planning Partners YouTube page. We appreciate you being here. Enough with the pleasantries and the introductions. We have a pretty interesting topic for today. We came across this article that was on CNBC that really hits home with us and definitely felt like it was something that we needed to address. The article was from this month, Wednesday, January 10th, so you can go and hunt it and find it. We'll actually post a link. You should be able to see a link to it here if you're watching this on video. But 62% of adults age 50 and older have not used professional help to plan for retirement. Here's why. And we are going to get into those reasons a little bit today because we found them very interesting. And some of them are pretty clearly things that we hear on a fairly regular basis when people come into our office. And you definitely want to get your thoughts on them and maybe add some additional color that I don't think you're going to see in this article, because the article, quite frankly, is really pretty basic. But number one, when it goes into the reasons why, it was 62% of those in that age cohort, 50 and older, have not consulted a professional, period, to help plan for their golden years, according to a recent survey from AARP. The top answer why, at 41% of those respondents, is probably most people could probably guess, is that they want to handle it themselves. They're DIYers. And we see this pretty commonly, right? People that come into our office that have always been DIYers, they've handled it themselves. And we've spent a lot of time talking about the difference between accumulation and income. And we can certainly get into that now, but definitely, your thoughts on almost half of all of these respondents saying the reason they don't use an advisor is because they want to do it themselves.
Yeah, and I'm not surprised at all about this in reading this article, that most people want to do it themselves, because that's really what you get out there. You can look on the internet and just about, if you see any article like this and you see comments out there on any of these articles like this that are posted on social media, out on a website or anything, almost half those comments, maybe a little less than half, but a lot of those comments are from DIYers or say exit. Throw your money into the S&P 500 and, that averages 10% rate of return over the last, since it's been out there. So, why try to even beat the index? And that's the biggest misconception, is that these DIYers are like, hey, why hire a financial advisor? Because they look at that as the only thing the financial advisor does is manage the money. That's it. That's what they think of. And truly, the thing this article, I think, that does point out is that there's a lot more that financial advisors do, that you need to look for financial planners that are looking at the entire piece of somebody's retirement. They're looking at their whole puzzle, okay? Not just the money management piece, because there's certainly some truth to it, that you can just put money into an S&P 500 fund, and it's over time, the broad market has returned 10%, 9-point-something% over the history, okay? But there's a lot more to it than just accumulating money for retirement.
So you actually went somewhere that you led into where I was going to go, because the title of this article is Why They've Not Used Professional Help to Plan for Retirement. Mm-hmm. And there is still this conception out there that people have of people like us, right? Financial advisors, investment managers, whatever you want to call us, that we're only there to manage investments, that we're only there to quote unquote beat the market, which is fool's gold. We've talked about that.
Correct.
Countless numbers of times. There's so many fallacies to the idea of regularly beating the market. And that's not what we're playing. That's not what we're here to do. If you can see this word right here, right? Planning is in the title of our firm for a very specific reason, because we are planners first, investment managers second. Not to discount investment managers by any means, because investments are obviously very, very important to what we do. And of course, in constructing an overall financial plan, but the plan always comes first. The plan dictates the types of investments that are used. And so I would imagine that most people that responded to this survey probably still view advisors as someone who only looks at the investment portfolio that you've got, as opposed to looking at the entirety of your puzzle, if you will,
Right.
the entirety of your financial picture, and actually putting together a plan in place as opposed to just constructing an investment portfolio. And it's something that, quite frankly, our industry has done an absolutely horrible job of over the years. Is they've put us in a position, or a lot of people in our industry have shoehorned us into the position of only being the investment experts, which, maybe we are, maybe we aren't. But the point is, that's not what we're here to do first. We're here to plan first. And planning is, you don't go into any business, you don't start any new business without a business plan.
Right.
You don't go into any new venture. I mean, hell, most people don't go to school or don't go to work every day without some type of a to-do list or some type of a checklist or some type of plan for what they're going to do to get through the workday. And if you're going to take that same process or that same idea of laying out your day, structuring your week, structuring your life on a day-to-day basis of, what you're going to do and constructing plans to get you through it, why wouldn't you apply that same methodology to your retirement plan? Right. And most people don't do that. They just look at it as an investment plan as opposed to an overall financial picture.
Right. Yep. Couldn't agree more. The other thing that I would talk about, you made a good point in pointing this out, that why they haven't used professional help to plan for their retirement, when a lot of the DIYers only focus on what they're contributing, where they're investing their money at. A lot of these people, some of the questions that I'd like to know is, how many people that are doing it themselves, all they compare it, so I'm just throwing in the S&P 500, what is the rate of return that they would need on their own portfolio in order to retire and achieve their retirement goal and you live through retirement successfully without running out of money? And most people don't know the answer to that question. And that's but when you're using a financial planner that's actually putting together a plan for you, that's planning for you to achieve your goals and maintain the lifestyle you want to maintain in retirement, those are the types of questions we're solving the answer for.
Another little pet peeve I have is people that talk about beating the market. And I always laugh whenever I hear the term, well, you're just paying financial advisors to beat the market, and most of them don't even do that. No, okay. What market? Right. What market are we talking about? Are we talking about the Dow Jones? Are we talking about the S&P? Talking about the Russell? Are we talking about the NASDAQ?
Mm-hmm.
What are we talking about? Are we talking about the international markets? There's so many different quote unquote markets out there that beating the market in general is such an ambiguous term that it's really, it's so hard to define, much less so hard. The unrealistic expectations that so many people place upon people like us because they want us to beat the market. There's so many different ways to define the market that's always a moving target. There's no way to realistically do that on a consistent basis. In addition to that, the number two reason that people said that they do not hire professional help is because 35% of those respondents say that they don't have much in retirement savings. I have some serious thoughts on this one, mainly because so many times people have come into our office for $500,000, let's say, close to $500,000, and they almost feel ashamed, or they almost feel like, I'm really not that important. I wouldn't be a big client to you, or I really don't have much. I know this isn't like $1 million. I should probably have $1 million before I'm ready to retire. And that's a fallacy that most people think that they need to have that amount of money in order to retire, first and foremost. But it's a limited way of thinking. It's almost like a self-depreciating way of thinking. And I don't like when people do that in any way. People should feel probably a little bit better about themselves. But, what you have is important. You may not think that you have, quote unquote, enough, or you may not have as much as your neighbor or as much as a friend of yours, but you have what you have, and what you have is important, and what you have needs to get you to, 90, 95 years old. When we're constructing retirement plans, and we've talked about, we need to plan for that long because most people's biggest fear in retirement is running out of money. So we need to alleviate that concern. But it's important, and you should be proud of what you have, whether or not you feel like you should be farther ahead in the race, so to speak. But especially, it's almost people like these that probably should be in our office even more.
Right.
Because if you feel like you don't have enough, then what you do have needs to stretch even farther.
Right. And it goes back to, back to the conversation we were just having as well. The question is, do you, with them not knowing if they have enough for retirement, that really depends, because it depends on what lifestyle that they're wanting to live in retirement. It depends. I meet with people that want to travel, that want to have a vacation home, that want to, pass money on to their heirs. They want to, there's a whole bunch of different goals that they want to do in retirement, but I also meet with people that pretty simple, they don't have a whole bunch of goals in retirement, and they want to spend time with their grandkids, and, they may want to travel a little bit, but there's not a whole lot that they want to do. They don't have any debt or whatnot. So it really depends on what their situation is, whether they have enough. But to your point, is making that what you do have last long enough so you don't run out of money.
I will add too, because maybe this also goes back to our industry as a whole, and the way that I should really probably be more specific when we talk about like the more traditional, large scale brokerage firms that you might see on Wall Street, for example. The way that they advertise, working with clients and the expectations that they set for what a retirement should look like. You see the pictures of the yachts and boats and the beaches, the beaches and the vacations and all these things. And in reality, we've been doing this quite a while, right? And we've done God knows how many financial plans at this point. But when we're putting together retirement income plans, usually the number one goal that most people have when they're looking to go into retirement is just to continue their lifestyle. It's not these fancy vacations. Maybe they go on an extra vacation or two. Maybe instead of, flying, coach, maybe they fly first class, maybe they spritz it up a little bit. But most people, when they go into retirement, don't have these fancy expectations for, the way they want to live. They just want to continue to live their current lifestyle.
Yeah, and stop doing what they're doing every day. They want to get up and go to work. They want to continue to live their current lifestyle and enjoy their life. It's really what they want to do. But going back to that same stat that we were talking about, 35% of the people who say they don't have much in retirement savings, I think there's also in different generations that have saved well for retirement. They've put money into 401k plans, 403b plans, company sponsor retirement plans. Maybe they had pensions. Those are going by the wayside, right? But there's also a lot of people in some of the generations in our age, really, that haven't saved and that are not saving enough. So what you have in retirement is all dependent on what you're putting in. And that's the biggest thing that I get, especially when I'm working with retirement plans, 401ks, 403bs, and doing education on it is, an account could be up 25% in a given year if they're all, all equity, like this past year, 2023. You could have been up 25%, 22%, whatnot, if you're in all stock funds. But if you only have $1,000 in your account, you're up 200 and some bucks. So that, for some people looking at that doesn't move the needle enough for them. They're looking at like, I only made 200 some dollars. What the problem is you're not contributing enough to those plans. So that goes back to education. It goes back to having company retirement plans more available, investment options in company retirement plans, which, with the Secure Act 2.0 and all that stuff that came out, that's a whole nother that's getting into the weeds, but that's a whole nother conversation. They're trying to make those retirement plans more attractive to smaller employers that don't have them right now, and to try to get people into more retirement plans. So those could be some other reasons that would attribute to some of this not having as much for retirement savings, because a lot of people, it's just easy to have it come out of their paycheck. If they actually have to write a check to put it into a Roth IRA or write a check to put it into an IRA. Now, if you're working with us, you're not really usually writing a check to put it into contribution. We would have it set up systematically where it can come out. They don't have to do that. But at the same time, that's when people actually have to do something themselves and have to think about doing it, it's less likely that they're going to do it. And if it's just coming out of your paycheck and you don't see it, they're saving for retirement. So that could be a factor into some of this as well.
Yeah, it's interesting to piggyback off, a topic that you started talking about there. Some of my favorite clients to work with are not the multi-million-dollar clients. Love them, don't misunderstand.
Right.
We'll take all the multi-million-dollar clients that want to come our way, right? For example, I just had a meeting this morning with a client. He and his wife, they just had their second kid, so they've got two, like one newborn, one toddler. They're both under the age of 30. They moved out of state, so they're actually living down in Florida now. But wonderful people. But they're young clients, and we're not managing a lot of money for them. By no means, by any reasonable expectation, would they be considered one of our quote unquote big clients. I love working with them, and I love working with clients like them, specifically because of the types of clients they're going to be in 20 years. And we'll still be around in 20 years too in this business, right? We're still young enough. We're far below the average age of most advisors out there, and that's definitely a topic for another day probably. But they're really fun to work with because you see them. We get to talk about the savings rates. And it's not so much about the rate of return because, to your point, if we get an extra 5% return in their portfolios right now, it's not going to move the needle. It's not going to make a difference.
Yep.
What makes a difference is talking to them and educating them on, okay, if we do these things today, if we make these decisions today around how much you're currently saving into these different plans, into these different buckets of money, what is that going to look like in 20 years? What is that going to look like in 30 years? How is that going to help you make decisions throughout your life that are going to dramatically affect your experience or your happiness when you finally get to the point of being able to retire? And really, with those clients, we're not even really talking about retirement. We're spending a lot more time talking about financial freedom. We're talking about optionality. We're talking about the things that, they have the ability to be able to do at the age of 60, being able to maybe take one last chance on a new business or, quit and take a few years off and do some things while they're still young enough to be able to do it and enjoy it, right? It's optionality. It's freedom. It's not feeling tied to a job or to an employer or some type of a career that you might not have the love for anymore. Because what we don't want to have happen is, you think that you can do it yourself, or you neglect to put a plan in place. You get to the age of 65, you're hurting a little bit. You really don't like your employer. Your manager quit and you got somebody else, and now you're reporting to someone 20 years younger, and you're just miserable.
Yep.
And you want to get out and you want to quit, but you don't have enough money, or you don't think you have enough money to be able to, look at all the different options that you might have available to you. And that's where we come into play. It's around helping you put together a full picture, a full retirement plan that helps you get an idea of what your retirement is actually going to look like. It's not about figuring out a way to get you an extra 2-3% return on your investments. If we can do that, absolutely. And in a lot of cases, we can. But that's not what it's about. It's about that word right there. It's about planning and figuring out what the best way to create optionality in your life as you get closer to and live in retirement.
Yep.
You have anything to add to that one?
I think that's probably a good way to segue, because I don't really have anything to beat. We're beating a dead horse on this right now. So,
well, the other thing, the 30% of respondents also said that, and I know you have thoughts on this one. They said that they cannot afford a financial professional. Yeah. I have some thoughts, but I'll certainly let you kick this one off, Aaron.
Yeah, that again, I talked about the previous misconception we were talking about. I think that's another big misconception. Like we were talking about, how many times do we get the question? And we just had a meeting with a client last Monday that she said, I don't have a lot, and her aunt, and she said I didn't have a lot, and she really had $300 and some $1,000, right, saved, and she was like, I don't really have a lot. Do I have enough to take for you guys to even work with me? Like, I don't know if I can do that. You tell me. You guys have minimums or whatever, and that's the biggest misconception, is people don't think that they can afford. And I also get people that'll say, I'll meet with them. We'll go through, what we can do for them. And they'll go, okay, so what do I owe you for this? Let me write a check to you. Certainly, we're fee advisors, right? We can take a fee. We have a fee structure that we can take, okay, that way. And it can be set up that way. But the majority of our accounts are actually fee-based accounts where the fees come out of the client account. They're not writing a check. Do they have to plan for cash flow, another budget line item, and everything there? The fees are agreed upon and disclosed to them on their statements, and it comes out of the accounts.
It's not like paying your utility bill. Yeah,
exactly, correct. So that's where it comes down to, hey, can I afford it? Well, yes, depending on what your what type of assets you have. So if you've got a $50,000 Roth IRA, the fee's going to come out of the $50,000 Roth IRA. So if you've got a $250,000 IRA or Roth or whatever you've got, the fee's going to come out of those accounts that are there, and that fee's agreed upon there. So I think that's the biggest misconception is they think, well, I don't have enough money. I can't afford to work with a financial planner. I can't afford to do this, so I just have to do it myself, which is what 30% of the people took this survey chose as their reason why they don't work with somebody. So that's common. I mean, there's a lot, we get those questions a lot, and that's just not true. There are certain firms that say you have to have $500,000 or up, and you know, there are certain firms that way, but there's also a lot of firms that don't operate that way, and you can still get financial planning.
Yeah, I mean, there's always investment advice out there, financial planning advice out there if you look hard enough for it. Certainly, we're obviously a valuable resource, but we never charge for like a consultation fee. I've actually been in meetings where we'll wrap up and they say, "What do I owe you for today?"
Right.
It's like this isn't a therapist office. Well, yeah,
Sometimes it
yeah,
is.
actually, there are a lot of days we definitely do operate as therapists for sure, but that's not the way that we charge. We're not charging you on a visit, right? So.
Or hourly like an attorney would or whatnot. So
yeah, but usually my retort to this, whenever I hear anybody say that I can't afford to work with a financial planner or they don't think it's worth it, usually I say, how can you not afford to work with someone, or at least not afford to look into it at a minimum? I think at the end of the day, more people should at a minimum be looking into working with someone and explore what types of different advisors are out there. Maybe it's not us, but there's all kinds of other different advisors that can do what we do, that can provide some assistance, that can provide some level of value. I think everyone needs to know what's available to them, the resources that are available to them, because, once again, when we're talking about tax planning, we're talking about, investment portfolio, risk management is really, really huge in retirement. Those things matter. And it's not about whether or not you can afford a financial planner. Can you afford a downturn of 20% in your portfolio while you're drawing 4 or 5% per year? Right. Can you afford that? Right. Maybe you can, maybe you can't. Yeah. But have you even thought about that?
Yeah.
Because there are some serious risks that you are incurring by doing it yourself. And if you're doing it yourself because you feel like you well, if you want to do it yourself, that's fine. Or if you feel like you and your spouse can do a better job of it, okay. That's one objection. But if you're strictly not talking to or seeking professional help because you feel like you can't afford it or you feel like you don't have enough, I would suggest that those people need to be getting in front of somebody pronto.
Mm-hmm.
Yeah, maybe give us a call first, right? But they need to be talking to someone, because whether or not you think that that's true, it very well may not be the case. And you very well may not think that you can afford a financial planner, but can you afford not to have a financial plan in place as you enter into retirement? Because you don't even have a clue all of the risks that can come at you when you have to start paying yourself an income from the assets that you've been saving all of your life.
And even if you are someone who wants to do it yourself, like you said, that's completely fine. But I would highly recommend that if you're a do-it-yourself investor, you need to focus on a lot more things than just the investments that's in your account. You need to be educating yourself on the tax laws. You need to be educating yourself on estate planning and how that works. You need to educate yourself on the penalties around Medicare if you don't handle that correctly. You need to educate yourself on required minimum distributions and what a tax balloon could happen and what could happen to your cash flows. You do a cash flow analysis on your entire portfolio and how you're going to receive income. You need to be able to plan properly for a good income plan that's both tax efficient and that's going to make your money last as long as you're alive. There's several things that we do to just mention right there that I didn't even talk about investments that financial planners do, that if you're going to do it yourself, you need to be very good at all of those things to avoid mistakes.
Yeah, and we're going to do an episode on the value of advice, financial advice specifically, and 90% of that episode is not going to say anything about investments.
Right.
Because so much of the value of what we provide has nothing to do with, this investment versus that investment. And so we'll certainly get there. But I think one very important takeaway that this article does have is that everyone should have a financial plan, whether it's someone like us putting it together for you professionally or whether you are doing it yourself. A DIY investor is different than a DIY planner. Okay. Investment and planning, those are two completely different specialties. Everyone should have a plan. You have a plan when you leave your house to go run errands. Okay. You have a plan when you start a new job, when you start a new business. You need to have a plan when you enter into retirement, because it is a completely different skill set creating an income plan as you enter into retirement and you're paying yourself for the rest of your life versus accumulation, versus taking X% of your paycheck every month and putting it away into a 401k. That's all very valuable. That's all very, very important. Do not misunderstand. But it's a completely different skill set when you have to start paying yourself income versus saving your income. So with that, I think that's a pretty good place to wrap up. Thanks for watching. If anything that we've said today strikes a chord with you, definitely check the notes in the comment section, and definitely look to go to our website, schedule a call. We would love to sit down with you. If you are a DIYer, if you are someone who doesn't think that you can afford a financial planner, or if you are someone who thinks maybe you don't have enough, you know what? Get an answer. Find out, because you very well might be very surprised that you are someone that we would love an opportunity to chat with and to help. So definitely please give us a call. Once again, Eric Douglas, this is Aaron McAndrew. Thanks for spending some time with us, and we'll see you soon.